Hello traders, it is Sunday, December 29th. It is almost the end of the trading decade. It's been a great decade. Let's take a look at what the market's done this year and get a glimpse at what might be happening over the course of the next few weeks so that we can set up our trading game plan as the new year begins. This is the S&P 500 on a daily basis, and you can see how every time the market has rode up on the upper end of the Bollinger Band, eventually there comes a little profit taking. We've been riding on the upper end of this range for quite a while. I'm expecting a little bit of a pullback. I'll show you a couple of other pieces of evidence that lead me to believe that. Let's go to a weekly chart. Riding the upper end, sell off. Riding the upper edge, you get a little bit of a dip. I'm expecting some profit taking in here. So this is a weekly chart. We're going to finally go to a monthly chart. You can see, same thing. Riding. Eventually you're going to get that dip. Here's the problem with calling tops in a market that's rallying this strongly. Oh, look, it's riding the upper end of the range, riding the upper end of that Bollinger Band. We should get a sell-off here. I'm going to start buying puts. I'm going to lose money. You do not want to pick tops on strong bull trends like this. That is a great way to lose money. You must wait for the evidence that there is selling. And typically what you will see is you'll see a drop and a bounce. The next one is usually tradable when you get that reversal. So you get your little blip here, a little bit of a surge higher. This one is much more tradable. We'll likely see a little bit of a dip, but the next one will be more pronounced and more tradable. So we have to wait for signs of weakness. So that was on a monthly basis. We're also riding the upper end of that Bollinger Band. Let's right click. Let's take off the studies. And in particular, we'll keep the volume back up. We can always overlay the moving averages. But let's clean the chart up a little bit so that we can go back and take a look at what we've got in terms of trend lines. We have the market breaking through the upper end of a trading channel. We have that on a daily basis. So let's go in. We'll drop a trend line using that. And we'll draw it to the prior high here. And you can see that we've clearly poked through the upper end of the trading channel on a daily basis. What does that mean? That means that we are likely in the next probably week or so to see profit taking and to see the market move back into this trading channel. So another sign that there might be profit taking. Let's go into a weekly chart. Let's perform the same exercise. Okay, we've got a number of tops here that we can draw the upper end of that trading channel along. We'll click that trend tool. We'll click right here and we'll draw that line. You can see once again on a weekly basis, overextended, market likely to come back into that trading channel. Let's finally do that on a monthly basis, see what that looks like. We'll also click on the trend drawing tool and we will start up here. And this is a monthly chart. So remember, this is a very long-term chart. Each one of these bars represents 1 month. So again, we're poking through the upper end of that trading channel, likely pullback. On a monthly basis, that pullback might not happen for a year. On a weekly basis, it might not happen for 2 months. On a daily basis, it may not happen for another week or two. So the longer the time horizon on these charts, the longer it takes for the market to pull back into this range. Just know that the market is very overextended. We also know from a forward PE ratio standpoint, the market's currently trading at a forward PE of 18. That is way high relative to its range. So we've seen nice buying. We've had a lot of good news recently. We've got all the things playing out. The dark clouds have parted. Brexit agreement looks likely. USMCA will be signed. Phase 1 trade deal with China signed. The Fed says that they want to remain accommodative through 2020. So we've got lots of good things for the market to rally off of. So on the one hand, I'm saying look out because we're way overextended here. Well, does that mean that Pete's going to go out and buy puts this week? No. It does not mean that. What it does mean is that all the long positions that I've had on I'm taking profits on because I am patiently going to do the prudent thing and I'm going to wait for that pullback and then I will reload, knowing that there's still a tremendous amount of upward momentum and still a lot of positive forces driving the market higher. You can see here on a daily chart that the daily ranges have been very compressed. The bodies of the candles are tiny. These are also known as dojis. The close of the day is very close to the open of the day. So we get these tiny gaps higher and then the market does nothing. Tiny gaps higher, market does nothing. So ultimately what I'll be looking for to give me some signs that that pullback is about to happen is I'll be looking for late day weakness. So in the last hour of trading, we start to see lots of selling, and I would look for that pattern to establish itself over the course of 2 or 3 days. And then we see a series of lower closes, meaning that the close today is lower than the close yesterday. So we need to see some follow through selling and we need to break some of these technical support levels. Well, what would be one technical support level? You can see this very, very steep trend line. If I draw it visually right here, that would be one sign to watch for. So we can draw a couple of trend lines here. I'll use the alert line and I'll click on that bar and I'll click on that bar. So that would be one trend line that would be broken. That would be first support right there. We have other trend lines that we can watch that might be a little bit steeper. I'll click alert and I'll use this low and I'll use this low. So this would be another technical support level, and I think this would be a likely one at the 316 level on the SPY. Why? Because this was a prior resistance level. Now it is support. Once we broke through that resistance, it became support. So I think first support for us is 316, and I think the first wave of selling that we see could bring us back to that 316 level. I would be watching for additional support there. When I see it, yes, I would start selling some bullish put spreads again. I feel that the first pullback that we see is probably going to reverse higher, and we're going to see the market try to challenge the high. On that reversal and on that bounce, if we cannot get back to the prior high and we see the market start to sell off, that's a possible double top lower high. So that would definitely get my attention. That may have some shorting implications, certainly on a day trading basis. The other thing that I want to point out is that for you day traders, we may see some nice shorting opportunities intraday. Stocks have rallied really, really hard on light volume, and so we could see profit taking, especially on those stocks that have really run hard. And intraday, once that selling momentum sets in, it's likely to feed on itself, and we're likely to get some nice, consistent downward movement in that stock, at least for the day, and it will set up some nice day trading, shorting opportunities. I certainly will be looking for that over the course of the next 2 weeks. That does not mean that I'm going to be carrying a bunch of overnight shorts. I don't want to do that. Not when the market is in a very, very, very strong upward trend like this. And that's critically important because where novice traders often go wrong is they start trying to pick tops and they go, oh, look, we broke out here. Market's going higher, higher, higher. I'm going to start buying puts. It's gone up high enough. Look, the RSI is overextended, and find a bunch of other reasons to decide that they want to be short. And then ultimately the market keeps going higher. They get shaken out of their position. They lose money. Yes, somewhere along the lines you get the pullback. Some of them will jump back in and go, oh, I missed it. I was early. Here it is. This is the one. So they short here, and then now they really get their head handed to them. You want to stay long this market. You want to know that it is overextended and that profit taking is likely to set in. So that's where we stand from a market standpoint right now. I'm looking for profit taking over the course of the next 2 weeks or so. Will it be tomorrow when the market reopens, the 30th of December and the 31st into year end? I don't know. I doubt it. I think that the market will finish on a high note. The market may not go higher, but I also don't think that it's going to drop incredibly either. As we get into the new year, January 2nd, 3rd, yeah, maybe we start to see some profit taking early on. I will be on the sidelines waiting, and I will be day trading from the short side. So, what can we do while we're waiting? Now, there aren't too many stocks that present really good bullish put spread opportunities at this time because almost every stock has run really, really hard. So, my job today is to try and find some stocks, individual stocks, not options. Well, gee, Pete, why aren't we trading options? Isn't this one option? Yes, it is. With a market that has a ton of little dojis like this, we have no real market tailwind. It's grinding higher, it's inching higher, but there's no real big market moves. There's no stiff tailwind behind us. And if we have a chance that the market could easily dip in the next week, we don't want to be buying call options, that's for sure. If we're selling bullish put spreads, we have to go too close to the money to get a decent credit on it, and a little pullback in the stock could create headaches for us right away. So instead, I thought I would go and take a look for some cheap stocks, meaning low price stocks, stocks that trade under $20, where we can just trade the underlying stock for a bit. As long as the stock looks good technically, you can still leverage the stock using Reg T 50% margin. And if you buy a stock on Reg T, you've got plenty of leverage. All you need is a $1 move in some of these stocks. Well, that's a 10% move on a $10 stock. That's a nice profit. It's a 20% move if you're margining. So we've got plenty of leverage and plenty of opportunities. So that's what I thought I would do. So I brought up a very easy search. I used the custom search engine in Option Stalker, and I went in and I took a look for stocks that are currently on a buy signal on a 4-hour basis, stocks that are on a buy signal on a daily basis, stocks that have relative strength versus the market on a 4-hour basis and a daily basis. Very, very powerful search variables. Okay, just these 4 boxes, if I mark these, I'm going to get some great candidates. But I also wanted to see a stock that's got a little bit of strength, a little bit of trend, and so I marked bullish for ADX. This is an indicator that measures momentum in the underlying and on a 15-minute basis. Then I also am querying stock price between $1 and $20. So I ran this search, and these are the stocks that came up. So if you're a swing trader, you don't have to knock through 50 stocks to find a gem. Look, what do we have here? 7 stocks, 8 stocks? Very easy. Take me 1 minute a day to run this search, look through the charts, see if there's anything I like, set up a game plan, and then to take a position. So let's do exactly that. I'm going to move this screen off of the chart so that we can see the charts better. So before I do that, before I start clicking on these, I'm going to tell you that I'm going to be looking for stocks that are not forging to new highs. I would rather buy a stock that's been a little bit of a laggard, that's seen some strength recently, and is moving through some horizontal resistance levels that I can lean on, because I want to develop a game plan, and that support level will become my exit point. So, first stock on the list, ARI. Let's put up some major moving averages. We'll go to 200-day, and we'll go with a 100-day moving average. There we can see that's pretty nice actually. You had a downward sloping trend line here, pretty steep. The stock is able to move up through it. We get nice big volume right here, which volume is a critical component as well. When we have volume, we know that the move and the direction are validated by that volume, and this would be our support level at the 1870 price point. So we've got overhead resistance here at about 1920. Yes, I think in the course of the next few days, the stock could easily challenge that 1920 level. So the stock is currently at about 1890, so it's got about 30 cents of upside. That's pretty decent. And you've got a stop right here that would be approximately 25 cents lower. So risk 25 cents to make 30 cents. That also makes it's reasonable. It makes sense. It's a reasonable trade to do. 50-50, but I feel that I have better than a 50-50 opportunity because the stock currently is moving higher. And we'll put up the 10 SI indicator. And you can see that the orange line is above zero. So it's strong relative to the market and it's got good volume. So I have all the nice characteristics for this stock to continue to move higher. I've got my stop out point and I have my target. I'm not looking for a lot of money, and I feel that I have better than a 50-50 win ratio on this, and the reward is greater than the potential loss. So this sets up to be a nice trade for us. That's how you manage the trade. That's how you look for it. Would this be my favorite pick of all time? Probably not. Why not? Too choppy in here. Choppy, 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 choppy. I like nice, tight price ranges. This is nice and tight. So this has been a very orderly rally, and I do like that. Incidentally, believe it or not, earnings season is 2 or 3 weeks away. Hard to imagine that. When you see a bar like this on a chart, you can hover over it and that tells you when the next earnings date is. In this case, it's February 12th. So that's very nice to know as you're setting up your trades. Let's go to the next chart, see what we've got. Yes, this is much more in tune with the type of patterns that I like for a stock. Nice and tight. Once the trend starts, it has a tendency to continue. We have a downward sloping trend line here. You can see how the stock has broken through that downward sloping trend line, multiple trend lines, one here, one here. You've got 1, 2, 3, 4 tests at support. Stock has been able to move off of that support, and now it's trying to get through horizontal resistance. All right, well, what do you do with this one? Nice volume also, good relative strength. Stock has sold off. It's a laggard. Okay, click GTC. Double click on that bar right there. If it's able to get through this little horizontal resistance point, we'll know that it's already gotten through the closing of this bar right here, which was the last trading day. Yeah, I think this is worth looking at the $11.50 level. Where would your stop be? Right here at the $10.50 level, that last support right in there. And just for visual purposes, I'll double click on it and draw it across. So that would be your stop. That's your entry point. Well, where would be my possible target profit? I would say on this horizontal resistance level at 1250, you could take some profits and then let it run up to 13 before it gets to that 100-day moving average. You can be taking your remaining profits on it. Yeah, it's got all the characteristics that I would look for in buying a stock. And again, this is an $11.50 stock, so very cheap. If you make $1.15 on it, that's a 10% return. Unleveraged. Let's go to the next stock. Don't see a lot that I like here because you see that it's already made a pretty big move and it's distanced itself from that major moving average. So I've got my protective stop would be way too far away, and my upside is also fairly limited at that 1245 level, which was the prior high. So I don't like that one for exactly those reasons. ELF, not seeing anything I like there. LABD, a little bit interesting, but this is a ETF on biotechs. It's a contra ETF. Biotechs have been rallying, and so it has been moving lower. We're going to continue to move on. It's not a stock, so I'm not interested in it. MIK, downward sloping trend line, big breakout, finds resistance here at the 100-day moving average. I don't want to chase it up here. I would like to try and buy it somewhere around that $7.20 level, right in here, halfway up that long green bar. There I would take a chance at it because that's also where we have a gap that filled, and that should be a natural support level at $7.20. And then we still have nice range up to that 100-day moving average, which is $8. Right here, I would not buy it, but you can see how the 200-day moving average held last Friday. Bounced, it tested it and sold off from it, found support at the 100-day. I would not chase in this market. Again, what is the market going to do? We're expecting to see some profit taking. Should we be real aggressive with our longs? Absolutely not. We should be very passive with them. We should not lunge. We should not reach for anything at this stage. We should mainly be in cash, waiting for that market pullback, and then firing on all cylinders when we see support. That is the mode that I'm in. I'm going to be mainly day trading, not doing as much swing trading right now. Let's continue to go down the list and see if we can find another one. I like the fact that you've got 1, 2 tests of support, long tails under body, a little bit of a grind higher. Stock starting to show a little bit of relative strength, but it's been very choppy. So I just don't like it for that reason. I don't like this type of pattern. Finally, we'll look at STAR, S-T-A-R. Pretty choppy, but this I view as more of a compression than anything. You can see how it's been stuck, just trapped in this long-term range. The longer and tighter the range, the bigger the breakout. So it has its first breakout, and then it pulls right back, and it tests that breakout, finds support. Good volume coming in here, nice relative strength, boom, breaks through that horizontal resistance. Now we've got long bars closing on their high. We'll zoom out and take a look at that chart. There you can see on a longer term basis, there's your breakout. Yes, I think STAR sets up for a nice long. So how would I trade this one from the long side? I'd go, whoops, sorry, I'm going to go back into the daily chart. So this is obviously your stop out point is this $13.80 level, and the stock is currently at 14.40 is where it closed. I'd try and get long somewhere in the middle of this long green bar in here, 14.20ish or so. And if you want to keep it really tight, you can use the opening here of this green bar, which was 14.09 as your stop. So risk only 10 cents on the downside if you're a very, very passive trader. If you want to hold it and be a little bit more aggressive with it, you can let it come back to this 1380 level, especially if the market's been selling off. Then you might see a little profit taking in it, but watch for relative strength and watch for that 1380 level to hold, and then you should see nice continuation to the upside. Where would you take profits on something like that? Well, if I get into the trade and I'm in at 1420 and I'm willing to let it go to 1380, then I better be in it for at least a 40-cent profit. So 40 cents of upside, 40 cents of downside with better than 50-50 probability of the trade working out. That's a decent trade setup. I would probably be looking for $1 out of this type of setup. If I can get $1 out of that move, I'd feel happy with it right now given current market conditions. So I'm going to conclude with one final search that's going to be better and better and better and better with each passing day, and I'll explain why. So we've gone through, we know all the stocks that are going to be reporting earnings within the course of the next 2 weeks. But in our database, we've also gone through and we've analyzed how stocks have performed 2 weeks ahead of their earnings announcement and what they've done into that actual earnings announcement. And for these particular stocks, they have rallied more than 75% of the time 2 weeks ahead of earnings announcements. Ooh, that's pretty good information. Well, where would I find a search like that? You would come in to the scanner, click scanner, go into the bullish scans, and then you would click buy into earnings. These companies will announce earnings in the next 2 weeks, and they have a 75% chance of rallying into the number. So as we get further into January, when more and more companies are going to be announcing earnings, you're going to see this list grow exponentially. And there are going to be some great trades in there. And as we start to see stocks with really liquid options, those are some incredible bullish put spread selling opportunities. That's how I love using it, because the stock doesn't necessarily have to rally, it just has to maintain its current level. And again, in this case, I'm going to be looking for stocks that have been lagging the market a little bit, that have a chance to move higher. I don't want something that's been surging, surging, surging higher. It's overextended. When the market sells off and when the market has some profit taking, that stock is going to see profit taking as well. I would rather have something that's been lagging the market that has nice, firm support. So as I went through the list, and I'm not going to spend a lot of time on this, but you'll see some decent charts, maybe not a bad candidate, but I'm going to go right down to, no, I would not sell a bullish put spread on this. But one that I did see, Again, this is not an extensive list. There are 8 stocks on the list. I like WBA into earnings. This is Walgreens. You can see this downward sloping trend line right here. You can see how that's been violated on the upside. You can also see this horizontal breakout right here at about the 57.75 level. That's also a support level. So tests it once, rallies, comes down, tests it again, rallies. I think this 57.75 level is going to hold for Walgreens into earnings. Okay, so here we could sell a bullish put spread, and there you can see the earnings announcement date is the 8th of January. So you want to make sure to be out of this trade before it announces earnings. That only leaves us with one expiration, which is January 3rd. I don't think the option premiums are that great or that liquid, but you could also just buy the stock and look for it to move higher into earnings, maybe with a $60 target. $1 upside, and use a stop right here. You've got support, support, support. 3 times it's bounced off of this 58.50 level. That's how you could play it. Use 58.50 as your stop and set your target profit somewhere around the 60.50 level. Maybe even a little bit higher if you start seeing long candles closing on their high, long green candles closing on their high. Ride it for a little bit. Keep moving your stop up, trail your stop higher. That's how we play the game. Excuse me. So, quick recap. Market looks good, technically, fundamentally, but it's overextended. We can expect some profit taking over the course of the next week to 2 weeks. On a swing basis, I'm mainly in cash. I don't have any overnight positions right now. I'm looking to day trade. I want to stay very, very fluid. I think that there are going to be some better shorting opportunities on a day trading basis as that profit taking sets in. Ultimately, on a swing trading basis, I'm waiting for that market to pull back. I've already identified SPY 316 as a likely support level that we could test. Once I see that support, then I'm going to be looking to sell some out of the money bullish put spreads on stocks with relative strength. And guess where I'm going to find those candidates? Ding, 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 ding. Buy into earnings. Stocks that have pulled back along with the market on that profit taking and have found support, those are going to be the ones that I'm going to be selling bullish put spreads on, expecting them to rally into their number. That's it for today, folks. I hope that you've got some good trading ideas. Please subscribe to this YouTube channel. Give it a thumbs up if you like the content. And if you want to try Option Stalker free for the whole month of January, go to www.oneoption.com, scroll down to the bottom of the home page, and there are 2 free trials. If you're an Interactive Brokers customer, there's a free trial. If you don't have an Interactive Brokers account, I would highly suggest that you open an account with Tradier Brokerage because you can get the free trial through them. And the commissions are included in the monthly price of Option Stalker. So you would have 0 commission for unlimited stock and option trades. Super, super good deal. Thank you. Watch for me tomorrow morning. I'll be posting my morning video. Thank you.